Yesterday, Resolve hit a low of $3.57 and staged a massive reversal. But that price action is nothing compared to the perfect storm brewing for next week because the stock is currently sitting at $3.80. But we are looking at a setup that could shock the market starting Tuesday at 8:30 a.m. Here is the critical detail most people are missing. This Tuesday's earnings call is completely voluntary because legally, Resolve doesn't have to report anything until March, and companies do not schedule surprise, non-mandatory calls just to deliver bad news. The last time they did this, on December 16th, the stock ripped 28% in a single day. So we are expecting strong revenue guidance for 2025 and 2026 that turns speculation into proven numbers. Now here is where it gets explosive, because short interest has skyrocketed by 210% in just 3 months, sitting at nearly 25% with utilization at 97%, which essentially means there are almost no shares left to borrow. When you combine this with the fact that insiders and early institutions like Citadel own about 30% of the float, you have a massive supply shock waiting to happen, meaning if Tuesday brings good news, short sellers will be trapped with nowhere to go, potentially triggering a violent squeeze. Smart Money is already positioning for this, as we tracked $600,000 in unusual bullish option activity this week, with institutions aggressively buying $5 and even $7 calls for next Friday, which is a massive bet on a move significantly higher from current levels. While we do have the Supreme Court tariff ruling on Wednesday, which adds macro volatility, the specific setup for Resolve is undeniable, with analyst price targets ranging from $7 on the low side to $15 on the high side, meaning the stock is severely undervalued right now. If retail investors wake up to this data next week, we could easily see a move to $7 or $8 by Friday. So make sure you are subscribed because this is going to be the most exciting trade of the week.